Hi, I'm Hashim, your trusted radar certified broker. Today we are breaking down Windsor House by Ellington in Dubai South, a design-led residential project in one of Dubai's fastest growing districts. I'll cover the numbers, ROI and risk, plus compare it with competitors like Azizi Venice, Emirates South, Avenue 888 and South Square. So by the end, you'll know if this fits in your investment strategy or not. In today's video, I'll be covering following topics so that by the end of this video, you have crystal clear and concrete yes or no for Windsor House. First, macro market context. Second, Ellington track record. Third, Windsor House project snapshot. Fourth, location and demand drivers. Fifth, the numbers, these are investor core. Sixth, exit and liquidity. Seventh, risk considerations. And eighth, my final verdict about this project. Stay tuned. Dubai's population is growing, 4.1 million today, 5 million plus we are expecting by 2029 and around 8 million by 2040. Housing pipeline, 310,000 new units by 2030. Oh my god, isn't it scary? Hold on, we will break it down for you. Dubai South is one of the top 5 growth corridors alongside JVC, Business Bay and Dubai Hills in the affordable segment. Yet, supply could be a concern for many. Expo City expansion, 600 events annually by 2033, up to 50,000 visitors daily. World Trade Center is moving to the Expo 2020 site. Fortune 500 companies are making their way to Expo 2020, with many already moved. Maktoum Airport, world's largest airport under construction, capacity of 260 million passengers once fully operational. Aviation jobs, 631,000 jobs today and 816,000 planned by 2030. Etihad Rail is one of the key components of growth in Dubai South. This isn't just a hype. These mega projects translate into real job, real demand and ultimately real tenants and buyers. Yet, there are many aspects which you need to consider before making your investment in Windsor House or Dubai South in general. Before we talk about the project, let's talk about the developer first because it is as important for you as the project is. First, delivery and timeline. Ellington has consistently delivered its project on time. For example, Wilton Terraces was handed over in early 2022, with RERA officials noting the units were delivered according to set timelines. Harrington House, their another project in JVC, launched in 2021, was completed ahead of schedule and began handover in November 2022. According to Ellington, all its completed projects, example Belgravia 1, 2, Somerset Mews, Eaton Palace, etc. have delivered as planned. Build quality and design. Independent reviews highlights Ellington emphasis on high quality finishes and efficient layouts. Buyers often praise its design-led interiors and resort-style amenities. The firm has won awards for interior design, reflecting its focus on lifestyle details. Then we talk about pricing and appreciation. Secondary market prices have risen steadily. Major development in JVC and Meydan have seen 5 to 7% annual capital appreciation. For instance, Belgravia 1 and 2 units launched around 850 to 900 dirham per square feet are now trading closer to 1300 to 1400 per square feet. We are talking about 2025 mid. Bayut, the leading property portal, reports roughly 50% total capital appreciation over the period of 5 to 6 years, consistent with that rate. Then we talk about the rental yields. Delivered projects offer solid rental returns. Bayut data show Belgravia 1-2 yields of 6 to 7%. Similarly, Bayut lists average rent around 100 to 120 for one bedroom in JVC. However, the average rental for one bedroom in JVC is around 70 to 90,000 maximum. So Ellington support is strong rent. Then we talk about the investors' general feedback. Overall sentiment is positive in its niche. Ellington is viewed as boutique developer, not the largest by volume, but one that adds value to the investors through location and design. Its resale market is relatively stable, even with fewer units on the market. Some investors note that service charges are higher than average market. Windsor House configuring 2 towers while 212 units in each tower. It comes with mix of studios. Studios are roughly around 430 square feet, very spacious. 1 bedroom 780 square feet and 2 bedroom around 1130 to 1260 square feet and 3 bedroom around 1500 plus square feet. The sizes are very spacious. Retail. Ellington is offering 10 ground floor units. Anticipated service charges, we are expecting around 17 dirham per square feet and anticipated handover is Q3 of 2028. Ellington brings its boutique design style to a district dominated by volume of developers. That's Windsor Edge. It's very important to know the proximity to major landmarks and locations. Windsor House is 10 minutes from Maktoum International Airport, which will be biggest airport by 2030. Roughly around 15 minutes to Etihad Rail Metro Station, which will be operational later on, and roughly around 20 minutes from Dubai Marina, Palm Jumeirah, Ibn Battuta Mall, and roughly around 25 minutes from Mall of the Emirates and 35 minutes from downtown and Dubai. Key demand factors: aviation staff, Expo visitors, logistics sectors, long-term residents. In Dubai South, the occupancy is roughly around 90%, which is way better than average traditional areas like Marina downtown. So it's a big opportunity for short-term rentals. While land supply here is abundant, design-led projects are scarce. That scarcity could give Windsor House an advantage. Now we are talking about the most important part of this video, and it's very crucial for you as an investor or even the end user. I'll take the example of a 2-bedroom apartment in Windsor House, which is roughly around 1140 square feet. And let's say that if we are buying around 1450 dirham per square feet, which will come around 1.75 million. Current rental in Dubai South is roughly around 95 to 105,000. So if I take the average of 800,000, gross yield would be roughly around 5.2%. And if I deduct service charges, which is roughly around 16 to 17 dirham per square feet, the net yield would be roughly around 4.1 to 4.3%. Since it's Ellington, and we are talking about the year 2029 when the airport is near to the handover, we have 7 main job creation districts. Rent would be a minimum of 120 to 130,000 considering Ellington's brand image and their previous records. I'm taking the very conservative figure. So now let's talk about the scenarios. The first scenario is all cash, where an investor is entering the market with full cash. So the rental would be roughly around 125,000 and the price, if I divide, the net yield would be roughly around 6% and gross would be roughly around 7.5%. Now let's take another scenarios with mortgage and personal loan with interest rate roughly around 3 to 4%, which will translate to roughly around 7 to 11,000 dirham per month in mortgage or the personal loan against 10 to 11,000 in rent. As an investor, you will be making only 2 to 3,000 monthly, but yes, capital appreciation is there and you will make it. Now let's take another scenarios for flipper. So if you being a flipper planning your exit at roughly around 1800 or 1900 dirham per square feet and you bought Windsor House roughly around 1600 dirham per square feet, we are talking about upside of roughly around 15 to 20%, right? Another very important, which is sensitivity. So if rent increase by 10%, yield improves to roughly around 7 to 8% net in your pocket. But if rent drops by 10%, considering the oversupply scenarios, yield drop to 4 to 5% net. And if price increase by 10%, the annualized return IRR would be roughly around 8 to 10% on cash. But if the price falls by 10%, IRR drop below 4%. IRR is very important for you as an investor. Many agents quote 8 to 12% ROI, capital appreciation, blah blah blah. But once you add service charges and realistic vacancy, the net yield is closer to 5 to 7%. That is the reality as an investor you need to know. For example, Emirates South is trading at around roughly 1215 to 1750 square feet. Azizi Venice, another master community from Azizi, is trading at roughly around 1500 to 1700 dirham per square feet. Mag 5 and South Square trading at roughly around 1100 to 1300 dirham per square feet. Avenue 888, a new project close to the Windsor, is trading at roughly around 1300 to 1500 dirham per square feet. Windsor House, positioned slightly on a premium side due to Ellington branding and design. Liquidity, investors driven, liquidity at exit. We're talking about a period of 2028 to 2030, depends heavily on the progress of Dubai South International Airport and Expo City. If you're planning to flip in the next 2 years, liquidity could be thin and may not be an ideal investment for you. But if you hold for 5 to 7 years and the story of Dubai South Airport and Expo City support the long-term capital appreciation. Another major concern is the risk consideration. We are talking about 10,000 units under construction in Dubai South as of today, and by 2027 to 2030 there will be total of 15,000 units in Dubai South and roughly around 10,000 units in Emirates South. So in total we are talking about 20 to 25,000 supply, while the expected absorption is roughly around 150,000 units. For example, Logistics City alone would host roughly around 50,000 companies, let alone other major industrial hubs like Javza, Expo, DIP. These are the job creation area, not job absorption. Another concern and the risk consideration is the rent ceiling. Currently, studios are trading around 40 to 50, one bedroom 70 to 80,000, two bedroom roughly around 90 to 105,000. We are not talking about 2025, we are talking about 2028. So let the conservatively appreciation of at least 5 to 10% rental return. Yes, the service charge is roughly around 16 to 17 dirham per square feet. This is the average. Another financing risk for the mortgage buyers, they are exposed to the high interest rate. If the interest rate remains the same, this could be a concern and challenge for them. None of these risks are project specific. They apply to anyone buying in Dubai South, but serious investors must weigh them carefully. This is the last part of the video, and as I promised to you about my final verdicts, here is my honest and brutal take on Windsor House. If you're a long-term cash investor, yes, you can expect 5 to 7% net yield and design scarcity and capital appreciation potential. We are talking about 20 to 40% return on your equity in the next 3 to 4 years. If you're planning to put your unit on short-term rentals, yes, considering 90% hotel occupancy in Dubai South. Furthermore, there will be expansion and growth from Dubai South Airport and Expo City. If you happen to be a mortgage buyer in the future, you have to be cautious considering the interest rate. Contact me if you have any concern and queries regarding the Dubai real estate. Signing off, your trusted RERA certified broker Hashim.